Real estate investing process. A paycheck is far from the only way to have a steady cash flow, as well as the stock market doesn't ensure that it is the only way to save for the future. In this situation, investment properties offer both beginners and experienced investors a lot of option to make money and also increase their capital over time. Due to the abundance of online resources, real estate investing, also known as REI, has become popular and an effective way to increase your net income and achieve financial freedom. But real estate investing has its own set of rules and regulations. That's why this investment is a bit complicated, or you can say buying a new property is different from buying some shares of stock. Well, if you want to know about this investing or are looking to start your career in real estate, you are in the right place, as this video is going to guide you about the real estate investing process. Watch the video until the end to get all the insights from it. Before diving into details, let's discuss why you should go for investing in real estate. Well, it depends on you and the goals and objectives that you want to achieve. As some investors purchase rental properties and hire managers to handle them and don't think much about their assets. On the other hand, some people purchase extensive properties and renovate them and then rent out the units of property. However, some investors look at real estate investment as a great way to increase wealth. Before you start investing in real estate, it is crucial to consider your risk tolerance. Indeed, you don't require millions of dollars, but you should not over-leverage yourself. And, as said with real estate, you can meet various financial goals. However, for turning these goals into reality, you have to follow a cohesive approach. In addition to risk tolerance, let's discuss some important things that you should consider before investing in real estate. Different kinds of real estate investment available offer return based on the following factors. Number one factor is to consider the location of the property. Most of the property values are dependent on the location. A small lot that is closer to amenities such as parks and public transportation can have more value than other places. Also, near the airport or industrial areas, property will be worth less than the quiet places. So, it is essential to consider a better place with necessary amenities if you want to make the most out of your investments. Number two, another important consideration is the capital, because your investment will depend on the amount you have. You might feel tempted to go for a cheap vacant lot in a good place, however, you will also have to consider the cost of the property on the respective land. For investors who are just starting, it is recommended to go for investing in an existing property to lower the financial risk. Number three, next factor to consider while making your investment in real estate is time. Calculate the time and effort you can devote to the management, operation, and development of your investment property. Like in the case of active properties, you have to put a lot of time and effort into managing things, especially in residential complexes. On the other hand, passive investment in REITs or other groups will take less time, and they are good for beginners who are not looking for getting experiences in stuff like renovations, management, and development of the property. Number four, the last factor is to decide whether you are looking for a short-term or long-term investment. As short-term investments can become liquid in a short time, and the long-term will become liquid over a long period. In short-term investment, you can buy and sell properties after a little renovation and make small profits. In this, you have to hire a third party to repair assessing the property's value. On the other hand, in the long term, you can go for residential or commercial real estate and lease the property after buying. In this, you will be able to generate a steady cash flow. So, this is a quick overview of the important factors that you should consider. Now, let's discuss how exactly you can start investing in real estate. To get started, we've put together a 6-steps guide that will help in your real estate investing journey. Step 1. Start learning about real estate. Learning the basics of real estate is essential, especially if you are starting. And it is also an excellent strategy to understand the ins and outs before you go investing. This will not only save your time, but also help to find the best investment opportunities according to your portfolio. So, it is highly recommended not to rush out for buying a property without knowing the difference between the closing date and the call. Make sure to conduct thorough research and take some real estate classes to know the complexities of the real estate world. Start playing with financial calculators and talk to experts to know how much the expenses are or how much return you can get from a specific property. The more knowledge you get, the fewer mistakes you will make as a beginner and can avoid significant risks. A quick reminder, if you've enjoyed the video so far, consider subscribing, as we frequently upload such informative and educational videos. Let's continue. Step 2. Make your business plan. With the right strategy and perfect plan, you can invest your money wisely in real estate investing. First of all, make a general idea of which type of investment you are going to make. What is the working capital you want to invest in, and what are your profit expectations? Don't forget to consider the risk, and keeping the risk factor in mind, make your investment accordingly. Another essential thing in buying investment properties is to know whether you want to take an active or passive approach. In addition, making your business plan and knowing about the right property for you is recommended to consult with experts. After understanding these things, you can go for a suitable strategy. Planning will help you in saving your money, as well as helps you to make smart decisions in the future. Step 3. Go for a passive real estate investment. As discussed earlier, while making your plan, you have to decide whether you're going for active or passive investment. Well, going for a passive real estate investment can be more beneficial than an active investment strategy. It depends on you, as there are several opportunities to invest in this sector, like in the stock market. So, real estate also offers different ways to invest, as you can go for REITs, real estate investment trusts, and also you can invest in real estate investment groups, which are very much similar to mutual funds. In addition, there is another great option if you want to make a passive investment in real estate, which is crowdfunding. This is about financing property as an investment and hiring others to cater to the logistics of a specific property. Step 4. Create your network and stay updated with the local market. Being a real estate investor, you will require a strong network of help to increase the potential of your investment. As if you are deciding to renovate properties, then you should have to be in the network of contractors, landscapers, maintenance workers, electricians, and other people who help you in that regard. If you are looking for a short-term rental, then you might not require connections with many contractors. However, you should have connections with cleaning services, local attraction owners, and online rental platforms. Building a network with other investors will also educate you about the best procedures for investing. You can also get handy tips for managing a property and building investment. Not just that, experienced investors in your network can also help you in diversifying your portfolio in the real estate world. Perhaps you can meet your potential partners for upcoming investment endeavors. Moreover, you should also focus on the housing market forecast and stay updated with the latest news in the real estate sector. See what is up for sale and what is not, and also consider the neighborhood profile of traffic of an area before choosing to invest in a property. Also, keep yourself up to date with laws and regulations such as property taxes, zoning, and availability. Step 5. Do some marketing for your business. This is an essential step in the real estate investing process because when you start marketing your business, you can be able to bring prospective deals to your business. And if you invest in marketing, it can be one of the best ways to improve ROI. However, you have to choose a suitable marketing campaign wisely that matches your portfolio. Furthermore, you can choose between several marketing campaigns, and we recommend you test out some campaigns first and stick to one that works best for your business. You can choose some free campaigns like referral and networking, MLS, classified ads, wholesalers, and bird dogs. Moreover, there are some intermediate and high-cost campaigns that you can choose, such as car signs, yard signs, advertising, social media, and direct mail campaigns. Step 6. Select your first property and execute your plan. After knowing all the requirements and getting into the networks now, you will be able to choose your first property. At this point, you have all the information you have about the investment funds. You know about the return. You can take help from your networks in investment property to get leads and can search on online sources like Craigslist, New Western, and Zillow. Keep in mind that properties move rapidly in general, so you must have your finances ready before deciding. And when you find the property according to your experience, go for it. When you close on a property, make sure you have the appointments scheduled with contractors, repair companies, cleaners, and others beforehand. This is important because your property will not sit idle, and you can minimize this time. Because waiting to implement your strategy in the investment property is leaving the money in your checking account that you were putting in the market. So, it is important to get into action on time and implement your strategy without wasting time. When you get things done and the property gets fixed, start taking action according to your plan. You can put the property on the market or can rent it out. If you follow these steps, you can start investing in real estate. Keep in mind, this is not a one-time process. It's a continuous process that you have to continue for getting desired results. Also, make sure to review your learning process as you will make mistakes, and by restarting the whole process, you can make a strong comeback.